The possibility of job cuts at specific hotels and the removal of Caesars Entertainment from the S&P 500 have raised concerns about whether the Las Vegas Strip remains an affordable destination. We need to discuss the challenges facing Caesars. Their income is declining, hotel occupancy is decreasing, and they've recently been excluded from the S&P 500. What does this mean for Las Vegas, its visitors, and its residents? Caesars Entertainment, which operates many well-known resorts on the Strip, is experiencing a downturn. In Q2 2025, their Las Vegas revenue dropped by approximately 3.7% compared to the previous year. While this percentage may seem small, it translates to tens of millions of dollars in losses for a company of this magnitude. Additionally, fewer rooms are being booked, with occupancy rates falling by about 2 percentage points, equating to roughly 27,000 fewer room nights sold in a single quarter. On September 22nd, Caesars was officially removed from the S&P 500, a prestigious index of America's top 500 publicly traded companies. Being part of the S&P 500 provides a company with credibility and exposure. Removal from this index signals instability, reduced size, or struggles with profitability. Many index funds that track the S&P 500 are required to sell off stocks of companies no longer included, which can further depress share prices and complicate efforts to secure loans or fund new initiatives. Currently, Caesars stock has declined by about 30% in 2025 and over 50% in the past 2 years, raising significant concerns. The company is also burdened with approximately $12.3 billion in debt. Efforts to sell major assets like the World Series of Poker and the LINQ Promenade have not yet resolved their underlying financial challenges. Why is this happening? Some issues stem from Caesars' internal operations, but broader factors affecting Las Vegas as a whole are also at play. First, tourism has declined, with visitor numbers dropping throughout 2025, including an 11% decrease in June compared to the previous year. Second, escalating costs in Las Vegas are deterring visitors. Complaints about dynamic pricing, expensive accommodations, overpriced food and beverages, and resort and parking fees perceived as excessive are common. For many, these costs are enough to shorten or cancel their trips. Third, a weaker national economy has reduced consumer confidence, particularly in California, a key market for Las Vegas. Fourth, fewer international visitors, such as Canadians, who the Caesars CEO noted as a significant contributor to the drop in room nights, are traveling to the city. Finally, competition has intensified, with regional casinos and online gambling platforms providing alternatives for those who might have previously visited Las Vegas. If this analysis resonates with you, consider subscribing to stay updated on future insights about Las Vegas, delivered with straightforward and honest reporting. So, how is Caesars responding to these challenges? They've introduced various promotions and discounts to attract guests. For visitors, they're offering deals on hotels and dining for advanced bookings or extended stays. They also participated in a recent citywide event called the Fabulous 5-Day Sale, which provided limited-time discounts on resorts, entertainment, and attractions. For locals, Caesars has begun offering exclusive dining and hotel deals, signaling a renewed focus on residents who have often been overlooked. Will these efforts succeed? Caesars anticipates a challenging third quarter, but remains hopeful for improvement by late 2025 and into 2026. Their CEO highlighted a robust schedule of conventions and large events expected later in the year, which could help stabilize revenue. However, the ongoing price increases and hidden fees are leaving many visitors frustrated, and the Strip no longer feels like the value-driven destination it once was. While the 5-day sale may provide a temporary boost, it's unclear if it will reverse long-term trends. The situation requires ongoing attention. Resort fees at Caesars now exceed $50 per night, and even at their more budget-friendly properties like Flamingo, Harrah's, and Horseshoe, fees have risen to $50, up from under $30 not long ago. Combined with already high room rates, these costs are driving some guests away. To fully recover tourism, Caesars and other Strip properties may need to make events like the 5-day sale a regular occurrence and offer more consistent perks throughout the year. Additionally, they must continue prioritizing locals, who have been largely ignored in recent years. This story is about more than just one company. It's about the future of Las Vegas as a premier destination.